Welcome back, everyone. So in this session, we are going to look at Learning Unit 8, Salaries and Wages. In this learning unit, the main thing that you need to know is how to record your salaries and wages in your salaries and wages journal, and then to transfer that information from those specific journals into your general ledger accounts. Now, the main thing students got wrong in the past is they got confused with SDL remuneration, UIF remuneration, and the SDL and UIF columns. So we're going to look at that as well today. And then as well as the fact that they forgot that for the UIF, it is capped at a certain amount, and it is 1% is contributed by the employee, 1% is contributed by the employer, whereas SDL is 1% that is contributed by the employee only. Let's quickly look at what the learning objectives for this specific learning unit is. You need to explain how to set fair value remuneration packages for different professionals. You have to distinguish the different components of remuneration. So what can remuneration be made up of? You have to calculate the gross and taxable earnings, and you have to describe and calculate the statutory and voluntary deductions, and record the salaries in a business accounting record, and record wages in a business accounting record, and then prepare the EMP 201 return for remittance. Okay, so that is what you have to do, but you can see the main things is to be able to record your salaries and wages in your accounting records. That's generally where they focus on, but they can still ask you for the EMP 201 that you have to record it and describe your statutory and voluntary deductions, what is the difference between those, and then calculate your gross and taxable earnings based on the information in your records, that your accounting records. This information is just where you will find the information in your textbooks, as well as the examples that we are doing where they are available in the textbooks. So the key terms and definitions that you need to be aware of and need to make sure that you understand is the following terms. So the first one is gross salary or wage. This is your basic salary or wage plus any fringe benefits before any deductions. So what you will see here, it is only your basic salary and any fringe benefits that you receive from your business. Now, fringe benefits are those benefits due to an employee in addition to a basic salary. So that is, for example, the use of a company car. It might be a cell phone, it might be a laptop, it might be where your employer contributes to your medical aid or to your pension fund. That is a benefit. Now, the term fringe benefits comes from the tax side of things, and that is why we have to do it in that category, so that when we do the tax calculations for your taxable earnings, some of the fringe benefits do not have 100% inclusion, but rather 80% inclusion based on the current tax practices. The next one is your net salary and wages, your gross salary or wages less any deduction. So it's the previous calculation, so your basic salary plus your fringe benefits less than the deductions. Now, your deductions can be made up of whatever is deducted from your employee's salary. Okay, and that would normally be your pension fund, medical aid fund. It would be any UIF deductions, SDL, pay-as-you-earn deductions. That is what deductions would be. Now, deductions fall into two categories. Your compulsory, so what you are required to be deducted in terms of law, and that is your UIF, your SDL, and your pay-as-you-earn, and your voluntary deductions. Voluntary deductions are those deductions that the employee decides needs to be deducted. Then your fringe benefits, we've already discussed that. That is basically any benefit you get due to employment. And this you can find on page 230 to 231 in your textbooks. Then the components of remuneration. This is what remuneration is made up of, or the different things that can fall into it. So the first thing is your basic salary or wage. If you work overtime and you're allowed to be paid overtime, overtime will also be included. Any bonuses, whether it's an annual bonus or a performance-based bonus, will be included. Then any pension funds or retirement annuity fund contributions from your employer will be included. Any medical aid contributions from your employer will be included. If you get a travel or car allowance, would also be included, or if you get a housing allowance. So those are the components on remuneration. But remember, this is not expenses that are paid. It is money that you receive from, or benefits that you receive from your employer. Now, gross earnings. Who can tell me what is gross earnings? How do we calculate this again? How do we calculate the gross earnings of an employee? Okay, you can tell me, how do we calculate gross earnings again? Saliwe, Masejo, how do we calculate the gross earnings? You can either type your answer in the chat function, or you can pick up your mic and chat to me. Okay, let's quickly look. If we talk about gross earnings are basically the total cost of company. So what will the company pay you? Now that is made up of your basic salary and any fringe benefits that that employee receives. So any cash and other benefits that they receive, okay, is your gross earnings. So that is the money before any deductions have been taken off by your employer. So it's not the money that you physically receive from your employer. This is the money that they pay you before any deductions. Okay, so that is just very important to know. It's not what you put in your pocket at the end of the day, but the money you receive beforehand. Now, how is our gross salary calculated? Now, based on the information and your remuneration, our gross salary is calculated using our basic salary, and then we add any fringe benefits. So anything we receive other than cash from our client or from the business would be added on there. So that would be your travel allowance, any bonuses you receive, any overtime. So all of that, any cash benefits, any other benefits, so anything you receive will be included in your gross salary. Now let's quickly look at the formula for the gross salary. You have your basic salary, you've got your overtime that you add onto it, and then you add your bonuses, and then you add your fringe benefits, and that gives you a gross salary, which is basically your total cost to company. Okay, so this is how we calculate the gross earnings or the gross salary. Now, your basic salary is based on the hours work and the rate per hour. Now, that is the same for salaried employees as well as wage employees. Now, wage earners, it would be based on a weekly amount, whereas for salary earners, it would be on a monthly amount. Then your overtime would be based on the hours that you worked in excess of your normal working hours times the rate per hour. Now remember, your overtime rate will be higher than your normal working rate. And the bonuses is what is being paid out. Your fringe benefits is employment benefits that you receive but it's not always in cash. It is generally in the use of an asset from the company. Okay, so that's just what you have to remember there. What is taxable earnings? Now, taxable earnings, on the other hand, is the amount that you pay tax on. So in terms of the Tax Act, it's all earnings received by the employees, less any allowable tax deductions. Now, for tax purposes, you are allowed to deduct any pension fund contributions that you've made. You can deduct from your earnings, and then on the difference is what you would pay as you earn. Okay. You do not get all the deductions you would be allowed to when you fill in your tax return, but they give you some of the deductions in order to reduce the amount of pay as you earn you pay. And then you also allowed to deduct the rebate that you get on your tax in order to reduce the tax payable. Okay, so let's look at how to calculate your employee's earnings. We're going to do a basic example. John Mapusu, normal working hours per week is 40 hours. At a rate of 250 Rand, his overtime rate is 1.5 times the normal hourly working rate. In the current week, John worked 47 hours and John is allowed a deduction of 2,300 for his pension fund for tax purposes. So now they want you to work out your taxable earnings. So the first step that we have to do is we have to go work out what is the gross earnings. So how would you guys approach this question? How would you work out the taxable earnings? Let's start with the gross earnings. How would you work out the gross earnings? What is the two components that make up gross earnings? Masejo Saliwe, how do you work out the gross earnings? What information in here would you take to work out the gross earnings for John? Okay, so the basic salary and fringe benefits. Okay, that's correct. How do we work out the basic salary based on this information? Because I'm going to repeat the question. How do you work out the basic salary based on the information in the question? Okay, so how do we work out the basic salary? Let's quickly have a look at it. So the first thing you have to do is you have to look at what was their normal working hour. Okay, so the normal working hours was 40 hours according to this session. Okay, and we get paid 250 Rand per hour. So that means for your normal hours, you take the 40 Rand, 40 hours, and you multiply it by 250 to work out what is the basic salary. Then secondly, you have to go look at, yes, they worked overtime. So now they tell you the overtime rate is 1.5 times the normal hourly rate. So that means the 250 Rand multiplied with 1.5 gives you your overtime rate. but we worked a total of 47 hours. So how many hours did we work overtime? If we normally work 40 hours and we now worked 47 hours in this week, how many hours overtime have we worked? Seven, that's correct. So how are we going to do the gross salary? Is we're first going to do the basic salary based on the normal hours, and then we're going to work out the overtime based on the additional hours worked. And then after that, we will deduct the pension fund deduction to get to our taxable earnings. So let's quickly look at how I did the calculation. So your basic wage is the 40 hours times the 250 gives me 10,000 Rand. Okay, so that's the basic wage. Then the overtime is the 47 hours less the 40 hours, but our rate is 375 Rand. How did I get to that? I took the 250 and I multiplied it with 1.5 to get to that value. So I take the 7 hours, I multiply with the 375, and then I get to 2,625 Rand. Okay, and if I add the basic wage and the overtime together, I get to our gross earnings for 12,625 Rand. But they asked you for the taxable earnings. So the taxable earnings is after what SARS allows us to deduct for tax purposes. So in this scenario, it was the pension fund deduction of 2,300, which means our taxable earnings is 10,325 Rand. Okay, do you guys have any questions on the difference between gross earnings and taxable earnings and how you calculate it? Do you guys have any questions on this scenario that we've just discussed? Okay. When we spoke in the beginning, we said the deductions, there is your statutory or your compulsory deductions, and then there's voluntary deductions. Now, what I said is statutory or compulsory deductions is deductions that you have to make whether you want to or not. And that is generally your taxes, your UIF, your SDL, and your pay-as-you-earn deductions. Whereas voluntary deductions is deductions that the employee can decide if they want to make. So that is a deduction to your medical aid, or your pension fund, or social fund, whatever the case may be. Now remember, our gross salary is before we take any of these deductions into account, whereas our net salary is after we've taken these deductions into account, both the statutory as well as the voluntary deductions. Now let's look at what are some of the statutory or the compulsory deductions. Our UIF, that is related, okay. Our UIF is short-term relief for unemployed workers. Now it is 1% of the remuneration, but it's limited, and this is where I just need to change something quickly. So it is currently, they changed it. It is limited to 177.12 per month. Is what the UIF is currently changed to. It was previously 148.72 Rand. So in your textbooks, just make a note that it has changed. If you've got an older textbook, they've updated it in the for the 2022 year. They've increased the limit. And employers pay equivalent of 1%, so the employers will pay exactly the same amount, and theirs amount will also be limited to 177.12. if the employee exceeds that bracket. SDL is a levy imposed to encourage learning and development in South Africa, and it's 1% of the taxable amount paid. So the SDL remuneration paid, 1% thereof needs to be paid over to SARS. Okay, so let's have a look at calculating an employee's UIF contributions. Okay, this is example 8.2 in your textbooks. It has been updated from previous versions. So if this is what the latest textbooks amounts are, so you can just follow on the slides if you've got an older textbook. Tandy and Katlego both work for the same company, but in different positions. Tandy earns 12,000 per month, and Katlego earns 18,000 per month. So they want you to calculate the employee's UIF deduction as well as the employer's contributions in each case. Will any of these employees' amounts be kept for calculating UIF? Do you think any of these employees' salary will be kept when working out the UIF calculation? Okay, so Liwe says yes, and that is absolutely correct. Katlego actually earns more than the maximum in terms of our UIF calculation. So his salary exceeds the 17,712 per month. So his will be capped at that amount, and Tandy earns less than that. So we will actually use Tandy's amount when doing the calculation. So let's look at how do we do the calculation. So you can see the gross salary for Tandy is 12,000 Rand. Katlego is 18,000 Rand. So remember, the UIF contribution is based on the UIF remuneration. So our UIF remuneration for Tandy is 12,000 Rand, same as your salary. Where Katlego's is capped at the 17,712 per month. Okay? Then our UIF contribution by the employee is 1%, and that's the UIF deduction. Is 1% of that UIF remuneration. So for Tandy, she needs to pay over 120 Rand to SARS for UIF, whereas Katlego will pay over 177 Rand and 12 cents. But our employer also matches what we pay over to SARS. So exactly the same amount the employer will pay over. So that means Tandy will get another 120 that is paid on behalf of her by the employer, and Katlego will get another 177 Rand and 12 cents that is paid over by the employer, which means the total UIF contribution that the employer needs to pay over to SARS is 240 Rand for Tandy, and for Katlego is 354 Rand and 24 cents. Okay. Do you guys have any questions on this? Do you have any questions on this? Okay. I've got a quick question for you. So based on the information on the screen, what is the total percentage of UIF that a company needs to pay per month? So what is the total UIF contribution percentage a company needs to pay per month? Okay, so the total contribution, let me quickly show you. The employee pays 1%. Oh, sorry. The employee pays 1%. The employer pays 1%, which means the total UIF contribution that an employer pays over per month is 2%. So if they ask you this, like in a multiple choice type question, you need to read very carefully if it is in total or if it's for the employee or the employer. If it is in total, it's 2%. If it is only the employee or the employer, it would be 1%. Okay, so that is just something to remember. Okay, now how do we actually account for salaries? We first have to complete all the information in our salary journal. Okay, so that's step one. We're going to look at what does the salary journal look like shortly. Once you've completed that, the totals of each column gets posted to your general journal. Okay, so that's step two. Then we post the totals to the general journal. But now the employer needs to make payments of those amounts to the individual employees. So now we have to record the payments in our cash book. Those payments that are recorded in the cash book then gets transferred to our general ledger again. So this means this general ledger here we take this general ledger here and this one here. If they've paid the full amount, our balance out that we still have outstanding should equal 0 Rand. Okay, so if the employer paid everything that he was supposed to, there should be nothing left over in that account. It should be 0. It should net out. So the debit and the credit side should net each other off, and the remaining balance should be 0. And then when we complete the EMP201, you take the information from this salaries account to complete your EMP201, and then whatever is on that EMP201 should equal what was paid out of the cash book. Okay, so the payment should agree to the cash book payments. Okay, specifically for the taxes. So that would be your UIF, your SDL, and your pay as you earn. Okay. Just make a little arrow here so you can see it comes from the cash book. Okay, based on this slide, do you guys have any questions on this? Accounting for your salaries. And remember, accounting for salaries, this happens on a monthly basis, whereas accounting for wages happens on a weekly or a fortnightly basis based on the cycle that the company works on. Any questions? Okay, so let's quickly look at what does the salary journal look like. You've got your employee number and your name. So this is where your employee's name is, and if they've given you the employee number, you include the employee number next to it. Your basic salary is the basic monthly salary based on the normal hours that they work. Your travel allowance or any other fringe benefits will then be shown separately, and any overtime will be shown separately, and then you add the basic salary, the travel allowance, any overtime, anything else, any other fringe benefits to get to your gross salary. Okay, so that is the sum of your basic salary and any fringe benefits that you receive. Your deductions is what gets deducted off your gross salary. Now those are made up of compulsory as well as voluntary deductions. Okay, so the pay as you earn, that is the tax that you pay on your employee's tax. Now, because of the fact that we do not teach you how to calculate that amount, they will tell you in the question how much pay as you earn that the employee pay over to SARS. Your UIF, you need to know that it's 1% of your UIF remuneration. So note here, they will give you the remuneration amount. You need to go calculate the deduction, which is only 1% of it. do not include the UIF remuneration in here. The amount should generally be in the hundreds or something. It can be less than that, but it shouldn't be thousands for UIF. Okay, so remember, you can never pay more than 17,712 is your UIF remuneration, the cap, and the maximum UIF you can pay is 177 Rand and 12 cents. Okay, so if you exceed that amount, you've used the incorrect amount. Then your medical aid, pension fund, social funds is all voluntary deductions. And that will vary from question to question based on what the employee contributes. Then if I add the pay as you earn, the UIF, the medical aid, social fund, if I add all of this together, I get to my total deductions. Okay, so that's how I get to the total deductions. Then my net salary is my gross salary less my total deductions. Gives me my net salary. Okay, so this is very important. A lot of students got this column incorrect last year because of the fact that they forgot that gross salary less total deductions gives you your net salary, and this is easy marks. Then this UIF here should agree exactly to what's in that column there. Okay, they should be exactly the same amount. Okay, and then the SDL is 1% of the SDL remuneration. They will give you the SDL remuneration. Remember, it will not be, it's normally a few hundred Rand. It will never be thousands. Okay, so remember that when you do that. And then this pension fund contribution is whatever the employer contributes on behalf of the employee. It can either be the same as this column, or it can be different. It all depends on what ratio the employee or the employer pays in relation to the employee's contribution. Okay, so this is what your salary journal looks like. And this is how you would fill it in. So here you can see at the bottom, we would debit the gross salary to debit salary expenses, the gross amount. We do not debit the individual accounts. Then we credit the EMP 201 control account with the amount of pay as you earn that was deducted. We will credit the UIF, we credit the medical aid account, we credit pension fund account, we credit the social fund. So all the expenses that was deducted goes to credit accounts because that is liabilities that we need to pay over to that individual supplier. Then we creditors for salary. So this is the net amount. Now this debit here equals all of these credits there. So I'm just going to highlight here and just repeat this. All of these credits equals the debit here. If it does not equal, it means you've made a mistake. Okay, so that is very important. All of those columns equals the debit salary. So the gross salary is made up of all your deductions as well as the net salary that your employer needs to pay over to you. And then what the employer contributions are, this is where we've got both a debit and a credit of the account. So we will debit the UIF contribution account, which is an expense account, and we would credit the EMP 201 account, which is a liabilities account. We would debit SDL contributions, which is an expense account, and we would credit the EMP 201 account, which is a liabilities account. And then the pension fund, you take a debit pension fund contribution is an expense account, and you credit the liability. It's only for the employer contribution, so the additional contributions by the employer, where we take the one side to an expense account and the other side to a liability account. We do not take the employee's deductions to expense account because of the fact that it's already incorporated in the salary expense up here. Okay, so that is very important to remember. Now, once your salary journals are finalized, you take the totals and you post those columns to the general ledger. Now, we do this so that the business knows how much money it owes and to which individual. Okay? And then the payment dates of the liabilities will depend on your policy. So that means the taxes and your net salary can be paid on different dates. And that you just need to take into account when you do your general ledger accounts. There might be two payment dates that need to be reflected. Okay, so what we're going to do now is in the session, we are going to work through question 8.3, where we do the salary journal. Then we're going to transfer the salary journal to your general ledger, which is question 8.4. And then 8.5, we're going to record the cash transactions, so the physical payments that occur. And then we are going to transfer that to the general ledger. So we're going to do the whole entire process in one question. Okay, let me just open the Excel file. Okay, I don't have the question open, so let me just go back to the slide. Okay, so let's read the question on the slide. This is in my textbook on page 244. In your textbooks, it will be about 7 pages prior to that if you've got an older textbook. Okay, so Damien Julies earns a monthly salary of $28,980. Okay, so that's his basic salary. During the month of May, Damien received a travel allowance of 1,345 Rand. Okay, so based on the beginning information already, we can see that Damien earns a monthly salary, a basic salary of 28,980, and receives a travel allowance of 1,345 Rand. Okay, the pay as you earn, his pay as you earn that he paid was 4,663 Rand, and he also pays 2,300 per month towards his medical aid. Okay. And then 3,280 towards his pension fund. So those are his deductions. Pay as you earn, his medical aid, his pension fund. Now the UIF deduction you will have to go calculate for him. They will not give you that information. So what they do, however, is here, they tell you the employer contributes to his pension fund on a Rand for Rand basis. So that means the employer matches whatever Damien pays over to his pension fund, which is this 3,280. This is what the employer matched, okay? Because it's for a Rand basis. So for every Rand he pays over, the employer pays a Rand as well. Damien also pays 65 Rand to the staff social fund. And further, his UIF remuneration is 17,712, so they capped him at the UIF remuneration, okay? And his SDL remuneration is 26,776 Rand. Okay, so here you can see they give you the remuneration amounts. They do not give you the SDL deduction or the UIF deduction. What they want you to do is complete Damien's salary and the Salaries Journal SJ4 for Go Fast Traders. Round all figures to the nearest whole number. Okay, so let's go fill in the information. So the basic salary is 28,000. So the first thing we need to do is we have to fill in who is the employee. Our employee is D. Julies. We do not have an employee number, so we only fill in that. Our basic salary based on the question was 28,980 Rand, and for the travel allowance he received 1,345 Rand. Now to get to your gross salary, we add these two, which gives you an amount of 30,325,000. Okay, so let's just highlight that, make that yellow. I'll show you later why. Then our pay as you earn, they said our pay as you earn is 4,063. Okay, so we make this line light green. Our UIF. Now the UIF, they only gave us the UIF remuneration. So you have to go calculate the amount. So you take the UIF remuneration of 17,712 and you multiply it with the 1% to get to 177 Rand and 12 cents. Okay, so that is the capped amount. That's the maximum UIF they would pay. Now, because of the fact that we have to round it to the nearest whole amount, we will round it to 177 Rand and not to the 12 cents. Okay, so that's why it's 177 in this question. Then, per the question, let's go back to the question. For our medical aid, we contribute 2,300, and for our pension fund, 3,280. Okay, so let's go back. Let's fill in the medical aid and the pension fund. So medical aid, 2,300 Rand, and pension fund is 3,280. Now what I told you is for the pension fund, for every 1 Rand he contributes, the employer contributes exactly the same. So that means that what is at G is exactly the same as what is at M. Okay? Furthermore, there's 177. What is at E is also what is at K, because the employer contributes exactly the same amount as what the employee contributes. So it's based on the same information. Then the information also stated that we contribute to the social fund club 65 Rand. And then for STL, they said our STL remuneration, if we go back to the slides, was 26,776. So based on that, we will have 267 Rand and 76 cents is our STL deduction. Okay, so let's just go back to the Excel file. So our STL calculation will be 268. Okay, so we're rounding it up to 268. Now the total deductions is your pay as you earn, your UIF, your medical aid, your pension fund, your social fund. Add all of that together and you get to your total deductions. Okay, and then our net salary is the gross salary less total deductions gives us our net salary. Okay, so this was part 1. This was question 8.3. Now in question 8.4 on page 247, they say now post your salary journals to the general ledger. Now we said we're going to post the gross salary. We're going to take this to our salary for wages or salaries expense. Okay, so we are going to debit gross salaries, just get the right color, with 30,325 Rand. Okay, so the gross salaries amount gets taken to your salary expense account. Then we said we have to take each of these liabilities to their relevant liability accounts. Okay, now liabilities are as liability accounts is part of your financial position. Okay, so I've highlighted in green. Your pay as you earn and your UIF go to your EMT 201 account. Okay, so the first one is your salary expenses is your 4,663 Rand. Then also salary expenses, you put in brackets UIF is the 177. Okay, so that comes off your salary expenses. Okay. Your employer's contributions will also be taken to that same account, but they will be, we would debit UIF contribution, the expense account of 177. Okay, so let's quickly go to the UIF contributions expense account. So I said only for the employer will you take it to an expense account. And then your STL contributions, you do exactly the same. So STL contribution is also an expense account. And you also take it to the SPL contributions, and the EMP 201 control account is your control account, so your details. And then we add all of that together to work out what is the total amount that needs to be paid over to SARS. Then we've got the medical aid. Now that goes to our medical aid fund. Okay. Now because of the fact that we owe them money, we are going to credit the medical aid with the 2,300 Rand. Okay. The pension fund, we also going to credit with the 3,280 Rand. But now important is our employer also contributes 3,280 Rand, which also needs to go to this account. Okay? But to get it in there, we need to take the other side to an expense account, which is our pension fund contribution account. Okay, so you can see only the employer contributions go to expense accounts, the one side of the leg. And that is to bring in the additional expense or additional payment that needs to be made by the employer. Because of the fact that these payments that are made are included in the gross salary, which we accounted for here under salary expenses, we do not show a separate expense account like we do with the employer. Okay. Let's see, what else do we still have? We still have social fund, so we still need to account for the social fund of 65 Rand. Okay, now let's see, have we accounted for everything? Yes, we've accounted for the gross salary. Okay, have we accounted for all of this of 10,000? We've accounted for pay as you earn, we've accounted for the UIF, the medical aid, pension fund, social fund. Yes, we've accounted for all of that, which means the net salary will be correct based on these at the bottom, and then we've accounted for the 3 items that our employer contributed. Now if you take these two, you add the 880 and the 65 Rand, and you deduct it from your salary expense, you should put a net salary. Now, where do we put the net salary? We're still missing a leg. We have not accounted for the net salary, so we're not balancing. So the net salary portion goes to our creditors for salaries. If we do not account for that, we have not accounted for all the transactions. So our debits and our credits would not align. Okay, and then these additional entries, these have a debit, a contributing debit at the other side. So if you go look at all of that, you will have the same number of debits if you total the amount to the same number of credits. Okay, do you guys have any questions on question 8.4? So the transferring of our salaries journals to our general ledger accounts. Do you have any questions? Okay, the main thing students got wrong last year, just to quickly tell you, was these account names here. Just going to make them orange. Those account names students got incorrect. This account name that they got incorrect. And then students did not know what accounts these had to go to. So they either did not fill them in or they did not know the accounting names. But the rest of it they could pretty much do. And then the other thing students got incorrect was generally the UIF and the STL calculations. That is where students made the biggest mistakes when they did this question in the previous year. Okay, so that is just something to take note of, that you do not make the same mistakes in your exam in the current year. Okay, question 8.5. Now we have to take our salary journal and we have to do the physical payments through the cash book. Question 8.5 you can find on page 249 of your textbooks. So the first portion they say make all outstanding payments from question 8.4 on the last day of the month. Okay, so now we have to make the outstanding payments. Okay. Okay, let me just quickly unhide information we have done so far. Okay, so the first payment that our employer would generally make is they would pay out the net salary to an employee. So our document number would be EFT, the day would be at the end of the month, and the name of the payee would be D. Julies. Okay. There would be nothing under the folio number because we do not have a debtor, we do not have a creditor's number. Okay. In the bank column is the amount that we are going to pay. So we are going to pay D. Julies 19,840. Okay, so that is the first one. But now we have to take it to what account? We have to have a contra account. Creditors control. Do we take it to input that? No, we take it to creditors for salaries. Okay, so the same account name as down here. Okay, so the first entry that we do is we're going to debit creditors for salaries with 19,840 based on the bank account here. Okay. Then the next payment we will do will also be an EFT. It will also be on the 31st. We'll go to SARS. Okay. Now we are going to pay SARS all of these four amounts together, which equals a total of 5,285 Rand. Okay, so that is what we are going to pay over to SARS. Okay, so it's the 4,663, the 177 here, plus the other 177 plus the 265 gives us 5,285 Rand that needs to be paid over to SARS. Now the account that it goes to is your EMP 201 account, which is also not an account that is listed here, so you take it to your sundry account. Now that payment will then be reflected here on the debit side because we are paying the creditor, and that means our account balances. So our debits and our credits are exactly the same. Then the next thing we have to pay over is we have to pay over the medical aid and then the pension fund and the social fund. So it's again an EFT on the 31st. So the first thing we're paying is the pension fund. Now remember, our pension fund is our contribution as well as the employer's contribution. So if I go to the pension fund, it will be the 6,560 will be the payment. So the 6,560 is what we will pay. We just make this. And because of the fact that we do not have an account for it there, we would put it under our sundry accounts. Then the next thing we have to pay is our medical aid. It's also an EFT payment. The medical aid is 2,300 Rand. And we also take it to sundry accounts, to the medical aid account. So our medical aid is debited the liability to show that we have paid it off. Then we've got our social fund, which is 65 Rand, which you include in there, which goes to social fund, and we debit the social fund with 65 Rand. Now, after we've done all of this, you can see all the liability accounts shows zero. Sorry, I forgot to do the pension fund here. So the debits and the credits equal each other. So we have actually paid the liabilities over. Now, I've added one more step in here just to show you. Now, because this is only the 31st, this balance will not be correct. But if you've taken all of the balances in that bank account, this 34,050 Rand, that would then be transferred to your bank account, which means 34,000 Rand and 34,050 Rand was the total payments that were made out of the bank account. So that is just to show you, if we go back to Learning Unit 4, the cash payments, remember the total bank column gets transferred to your bank account so that it balances. Okay, and this is how you do the payments and transfer them into the general ledger account, which was question 8.5 as well, to show you how we account for it in the cash book payments journal up here, and how we transfer each and every transaction to the respective general ledger accounts. Do you guys have any questions on this? Okay, so any questions on questions 8.3 to 8.5? Okay, so the last bit we're going to look at today is accounting for wages. So this is how we complete our accounting for wages. So we are going to complete, this one has a bit more steps than your salary one. They asked this last year in the exam, and a lot of students struggled with this. Because of the fact that they did not actually study this. So how this differs from your salaries is you complete the wages journal exactly the same as the salary journal, except it's only based on a weekly amount. Then you are going to post each week to your general journal. So by the end of the month, when you do the payment, you would have had 4 entries in here. Now remember, your payments for the net payments will be made at the end of the week. So you pay your employee on a weekly basis. So net wages will be paid on a weekly basis. Then you post that net wage payments to your general ledger. So your net wage is paid out on a weekly basis. But then at month end, we make all the other payments. So that is all your payments to your pension fund, to your medical aid fund, to a social fund, to SARS, so the UIF, SDL, all of that will only be done at month end. And then you post that to the general ledger. So what they did is they provided the information for the 4th week last year in the exam. They gave you the opening balances for the first 3 weeks so that you can make all of this information and do the general ledger accounts. And a lot of students struggled with that question because they only studied salaries and not the wages. So this is very important that you guys know the difference between the two. And remember, this happens on a weekly basis, except for the payments of certain items which occurs on a monthly basis. Now, how does that information look in a journal format? Your wage journal looks exactly the same as your salary journal, except of the fact that you've got normal time, you've got overtime, a gross wage instead of gross salary. You've got your pay as you earn, your UIF, your pension fund, your total deductions, that's exactly the same. Then you've got a net wage, which is instead of net salary. And then your employer contributions looks exactly the same as your salary journal. So let's quickly go through what each one is. So employee number and name is where you put the employee name and number. Your normal time, overtime is based on the normal hours you work. Your overtime is based on the overtime you work, and then your gross wage is adding your normal time and your overtime together. Then your deductions, you've got your pay as you earn, which is based on the tax. UIF is 1% of the UIF remuneration, exactly the same as the salary. It is capped at 17,712 Rand. Then your pension fund and any other deductions will also be deducted, and your total deductions is adding all of those deductions together. Your net wage is your gross wage less your total deductions, and then your UIF, STL, and pension contributions is what this employer needs to pay over on behalf of the employee. So the UIF and STL is what they are required to pay over by law, and the pension fund is whatever they match to your salary. Okay, and this is what it would look like. The only difference is instead of creditors for salaries, we take it to wage expense, and instead of, this is creditors for salaries, and that was salary expense. So instead of salary expense, we take it to wage expense, and instead of creditors for salaries, we take it to creditors for wages. That is the only difference when it gets to the general ledger account between a wage journal and a salary journal. Okay, the last thing I want to look at is what is an EMP 201 return. So this is the return that we fill in for tax purposes to declare the taxes, the UIF, the STL, and the pay as you earn that we've deducted from our employees and need to pay over to SARS. Now let's quickly look at an example just to show you. So here I've given you the gross salary, their pay as you earn deduction, UIF remuneration, STL remuneration. Now remember I said this is remuneration, so the contributions, so the deductions would be based on 1% of this. So when we work out the contributions, it is 1% of the 17,712 Rand, but both your employee and employer pays it, so it's multiplied with 12. Whereas your STL contributions will only be multiplied by 1. Okay, and then these totals is what you will include on your EMP 201 return. So let's quickly look at how you would complete it. You would put it in the pay as you earn there at the top. You would include the STL liability and then your UIF liability, and then your total at the bottom should agree back to your accounting records. Okay, and that is how you complete an EMP 201 return. Okay, it's not very difficult. You just need to know how to calculate the amounts. Okay, so what I want you to do for homework is go revise the content that we discussed today. I want you to work through examples 8.3 to 8.5. It's similar to question 3.3 to 3.5. Then complete questions 8.1 to 8.2 that we have not discussed, and then work through question 8.6 and 8.7, which we will discuss tomorrow, which is a wages question. But I want you to work through it. Do you guys have any questions on Learning Unit 8 so far? Do you guys have any questions on Learning Unit 8? If you don't have any questions, then we are done for today, and then you are welcome to leave the session.